as you can see here on the Swiss index, dollar Swiss, it is not yet a sell signal, but we are getting either profit taking, or that could be the beginning of intervention from the Swiss National Bank. And you can see a similar move in the dollar Swiss. It has the structural point now is the 93, which is equal to, synonymous to, the 107.62. So 107.62 on the index is equal to 93 on the spot. And if the dollar Swiss gets above the 93, which is now the next structural point, then we're probably going to have a major short covering rally. And we can see now, that's why we identified that the dollar and the Aussie are the two strong currency this week, coming into this week, because there is buying coming into them, there is accumulation coming into them. Okay, so if we look at the daily chart for the dollar Swiss, you can see all last week the dollar has been rallying against the Swiss. Look at the moves on the intraday. The close that we have at 91, 98 or 92 is a pretty decent close. The high of the day was, let's say, 92.15, so closing 25 pips away from the high is a pretty respectable close. This is interesting too, guys. So I have the 92 here, and it closed at, this is a very good close. Any trade above the 92.01 or 92.03, that would be a good buy signal. So we're pretty much we want to make sure that it gets above the 92.01 before we actually do any buying. Based on the daily chart, we don't really have any nearby sell signal unless it trades below here. So anywhere over here is just might be a pause or some profit taking to the downside. So in this case, our buying point is going to be the 92.10. So for the dollar Swiss, and you can see from last week, we were buying it from above 90.58. That was our buy signal from last week. And now it is trading at 92, so that was a pretty decent, I mean, you had 150 pips on that trade. So we'll buy it above 92.10. And my next structural point is the 93 as is from last week. It has not changed. If I buy it at the 92.10, I can place my stop somewhere around here, around the 91.75. So my long stop is going to be the 91.75. You just want to place your stop right here. You just, okay. There is no reason for us to initiate a short. I mean, the only first place that we can consider to go short is right here, below the 91. Above that, I mean, other than that, there is no reason for us to initiate a short unless it trades below the 91.20. So that is a big, so any move up here, any decline up here is actually a buying opportunity rather than being a selling opportunity. And if we're going to short it below the 91.20, our stop has to be above the 91.20. So I'm going to short below 91. So there is 100 pips between my buy point and my sell point. Why? Because I have this big momentum. I am now in an uptrend, so I need to be sure when I take a short that I'm taking the correct short. My structural short to the downside is still the 89 handle, which was the all-time low. My long stop is there. My short stop, if I go short below 91.10, 91.20, I'm going to place my stop right above the 91.20, because I do not, if it trades, if it does this below 91.20 and I go short and it gets back above it again, I don't want to stay short with it. Okay, so for the dollar Swiss, I'm going to buy above 92.10, and if I buy it above 92.10, my stop on the long position is 91.75, so I'm risking about 30 or 40 pips on that trade. And my structure long is the 93. This will be the next target, and if it gets above the 93, then we should get a very nice explosive move to the upside. On the downside, I will only short below the 91.20, and if I do, I'm placing my stop right above it. I don't want it to stay to linger above the 91.20, and if it does, then the next structure is the 89 to the downside. Okay, this is the dollar Swiss. All right.